Good morning, good evening, everyone. Okay, so we're just gonna run a few examples of today equilibrium price, which is from the last lesson that we talked about yesterday, lesson number 1. If you haven't checked it yet, you can go ahead and go through the first lesson about the equilibrium price. This is from the book, Price Action for All. You can get it, of course, from my website. Okay, so basically the idea now is to go through the levels of the market today and understand how the market developed around the market price levels. So basically the market price situation. Okay, so let's grab the example of the currency markets today and how it developed around the equilibrium price. So for example, we go here and we got the euro dollar situation. So basically the equilibrium price and where the market was set up in order not to have a speculation, it was around the 105.80, 105.90. Okay, so why you realize that is because basically the market didn't speculate much around this price. So whenever the market was approaching the 105.80, it was actually jumping towards buyers and also going towards the sellers. But when the price was actually in this price between the 107.80 and the 105.80, 105.90, as you can see, there is no speculation whatsoever. There is basically no opportunity. All the opportunity was always above it or below it. You know, always above it, like you see here, or below it. So to me, the equilibrium price, which we're going to also talk about the pivot points daily and the future lessons, it was that level that basically you just want to wait and see what happens above or below. Okay, so you wait for the confirmation, you wait to see if you can buy, you wait to see if you can short, but around that price, there's nothing you can do. So you had to try to avoid that price before you jump in. Okay. In other terms, the euro dollar was basically for the sellers pretty much the entire session. Just that when we got to that level right here, equilibrium price, you stop trading. There's nothing you can do with those prices unless you have enough confirmation to short or enough confirmation to buy. Let's go to another example with equilibrium price with gold, for example. So now with gold, the equilibrium price, it was around the 1910 and 1912. So around 1910, 1912, again, we haven't done anything. Okay, so around those prices, we just waited for buy confirmation or short confirmation. So basically today, below 1912, everything was for the seller. And we are approaching now 1900, which below 1900, we're going to go for even more sellers. But above it, we might wait for the buyers. But that's a different situation. What's important here now is to identify the equilibrium price for future references. Okay, let's give another example. For example, dollar Canadian today. Okay, so we had where the market was around all the time, it was the 135. That was the equilibrium price of the day. Above 35, buy situation, buy levels. Below 35, shorts and only shorts. Around that price, be very careful. Again, equilibrium price. Okay, so when you understand that, you basically can catch on the markets very quickly and see when to expire. Let's say, for example, you bought the 35 without knowing that was the equilibrium price of the day, so that you can expire really quickly. If you're shorting at the 135, you can expire really quick at 35.05. And if you buy a 135 and it goes down, you can expire at 34.96, 95. Okay, so that's very easy to see when to expire when you are jumping in the market before you should or before you have enough confirmation at all. It can also work for index. Let's say S&P 500 or whatever index you see, it also works for the equilibrium price the same way. Okay, so this is the NASDAQ right here, S&P 500 right here. The equilibrium price, it works exactly the same. Okay, if I can give you another example, the pound dollar, equilibrium price, 21.90. 21.90, nobody moves anything. Equilibrium price. Below it, all sellers. Above it, all buyers. So today, it was all the time below 21.90. So only shorts for today. Over time, with practice, you're going to start realizing what is exactly the equilibrium price for you. Without sometimes even noticing, you're going to be working on the equilibrium price and noticing what is the market that has no speculation at all on certain levels, certain prices. Okay, so this is basically an example and how you can deal with the equilibrium price for future references. Again, you can follow the technical situation on price action on my website. Let me show you here. And every day when it's necessary, of course, because sometimes the market is just moving towards the same levels, I upload on the website the technical situation of the market in price action. You won't find any information like this on the web. Nobody will give you the price on that accuracy because I don't use indicators. So all I see is when you can buy, when you can short. And if I don't see any difference between one session and another, then I won't update anything. But if you do, if you see the market really moving one day from another, you go to watch mytrade.com, and on the English version, you're going to see the analysis like this. Okay, make sure it's the last one. Of course, I do a scalping, so I'll give you some of the levels that I'm considering to scalp. Okay, and that's the last one you got right here, which is this again the same because we are kind of like getting through the last prices of the analysis, and this was made 3 days ago, and it still helps. Okay, I'm gonna have to update some of the probably gold, which is again all the sellers, and we are around the 1900 at this point. So okay, guys, hope you liked the lesson of today, and I'll see you on the next one, which we're going to be talking more about map price and how you can set up the map price in your charts, in your platform, and with your broker. So I'll see you on the next one, and any questions you can ask me here on the description and the comments down below this video. Again, my name is Karina Fabi, and I'll see you on the next lesson.